them fix this. When you click this, I don't want to come over here and be clicking more of this to change to 11 lots or whatever. I want to click this. This should be selected just like that, just like it used to be, so that I can change it and then press enter, right? And make that happen. I don't need that extra click. That kills time. So let's cancel all. Control backslash off the numpad key. We canceled all open orders. We still have our position on, but we have canceled all outstanding orders. So let's start over again and let's use some attached orders. So I'm going to flatten, control period. I do recommend using cancel orders on flattened position. And in fact, there's even an additional setting where you tell it to, upon request to flatten, cancel orders prior to sending the flatten. And that's actually really important, because if you're trading at boundaries of margin limits or whatever on your account, you will actually get denied flattening, because it knows that once you do that, you'll have some type of available potential margin requirements through outstanding orders that are actually going to be denied by the risk platform. So you need to cancel orders and then flatten. And I believe there's a setting that does that. We might be talking about the same one, but you could double check if there's another one. All right, so attached orders. First, we can go and see what these attached orders look like. You know, I've got a little NQ2 target here. We can go to setting that up in this targets area. You know, we got an 80 tick, 160 tick for two different targets, each for kind of, you know, half of the quantity or whatnot. And then for all quantity, we have an 80 tick stop. These things are all grouped by all OCO groups. Well, the stop is all OCO groups, but each of these are individual. You have OCO1, OCO2, those kind of things. So we have a hotkey for turning on or off using attached orders. And for me, that's Control 0. My thumb kind of hangs out there. My thumb is what does the control period or the Control 0, right? Flatten or turning on, see the checkbox, or off, just so you know, right there. On. So if it's on and we short, that's what it looks like. Let's say that we wanted to cancel all those, but maintain our position. Control backslash or forward slash. I don't know the names between backslash, forward slash. It's too confusing. Is it back or forward from where we start at the bottom and start to slash, or back or forward from where you start at the top? Don't even tell me in the chat, because I won't remember it. It doesn't matter. I don't know. I will die not knowing forward slash backslash. What else? We could send these attached orders. Let's say that we had, you know, gotten out of it just like we did with a position still on. Well, let's just do a basic OCO, right? Let's just do OCO limit and stop. Okay, I want my limit order. And again, quantity matters. This box, you see it's highlighted. This quantity stuff does not matter for this quantity stuff. Very important. So let's set up 2 OCOs with 1 lot each. Let's set a limit at 21,120 and a stop at 21,180. And we are short, so we need to buy. All right. Let's do another limit at 21,080, and we'll keep the stop the same. Buy. What did I do wrong? Oh, I said 51,080. Look at that. You know what? We put that order in, right? So one thing we haven't gotten to yet is, and I'll have this while I'm trading and whatnot. orders. Hmm. So that order did not go in. It's sim, so maybe it doesn't actually give us messaging. Hmm. I'm actually not sure what happened with that order. Actually, it didn't go in because there's no different quantities for the stop, and obviously there's no. But anyways, if you're ever confused about do I have an order in or something, and so this is fantastic, um, you check your orders, right? And this is something again we'll have up while we're trading next week and whatnot. So let's try it again. We adjusted our limit, and now it works. So you see we have a quantity of 2. If we click in here, there's 2 different ones that we could modify, but it goes ahead and lumps them together since they're at the same price. And then we have each of those orders. And we can see all of these. We can see OCO IDs. So as you can see, there is a stop and a limit and a stop and a limit. Excuse me, a stop and a limit and a stop and a limit, right? Because they have the same OCO IDs. So you know that they're connected, right? Another window that we'll have up just to confirm, get one more confirmation, is trade positions window, right? So I don't have this set to like the sim service or whatever, so we'll just ignore it for now. You can set up filters and stuff for what you view. Oh yeah, that's what happened. Yeah, thanks, Nerman. That's exactly what happened. Oof, I feel like an amateur here. It's I'm not in like trade mode right now. I'm in teach mode, so it's a little difficult to be on top of everything. What happened is we placed a buy limit at 50,000 or whatever, which obviously we got a great fill on, and you can see the fill on the chart right in front of us. We scaled out of one. That's what happened when we made that mistake by doing so. And that brings us to a good point. I wasn't even planning on teaching this. I'm actually glad it happened. Mistakes happen. What might we do in this? Right? What might we do? Right? Well, really, we could add to our position to get back in the intended position size. We're right around our entry, so it doesn't really matter, right? We could just sell another one. So now we're short 2, and now we've got some nice perfectly sized OCOs to do what we want it to do, theoretically. So, anyways, probably me making a mistake there made this a little better than it would be because we all make mistakes. You guys are going to make mistakes. I hadn't planned on teaching making mistakes in order execution, but it's a great concept. Again, it's fortunate it worked out this way. That's what's so good about live teaching and whatnot here. Anything else on, Toby or any of you guys, if you think of something around order execution platform for trading, let me know if you guys think there's something important to cover there. Otherwise, I think we're pretty good. I'm going to flatten, which is flatten and cancel. We covered the scale in, scale out settings, but I can show you here visually. You just go to this menu option, and the settings are going to be attached to this. Okay, this I don't even know what to call it. The name of your settings for trade management and your attached order settings and whatnot in particular. But it's connected to that, so make sure it's selected, and then you go into your menu, and we'll go to orders, and you can allow for, in particular, scale out is the one that we kind of talked about being important. So let's say that we have a simple bracket. And let's say that we come into our hotkeys here and we short 2 contracts with attached orders on. Great. Now I change my quantity 1 and I'm going to scale out 1. Look at that. You see the quantities adjusted on the OCO? It was 2 and 2. Now it's 1 and 1. Very, very handy feature. DVA, developing value area. We already have it on the chart, so you've already been, those of you who are new to it, getting accustomed to seeing some price action relative to that framework. We could get into the math of it, but it's really just kind of a measurement of volatility around volume weighted average price. If you don't know what VWAP is, just go Google it. It's not a big deal. It's literally the definition is in the name. Volume weighted average price. It takes how much volume was traded at each price for every trade that comes through, and it finds a running average of in a volume weighted setting. So if 100 contracts trade somewhere, it's going to have more weight than a price at where one contract traded, right? So the volume weighted average of those two prices would be almost all, if we were just a sample size of those 2 data points, it would essentially be up there at the 100, right? Because 1/100th of something is not going to pull away that average very far. And technically, the developing value area, as we use it, is this shaded region that I got you to set up. Oh, we shouldn't have got out of that short. Oh, just kidding. I'm just that FYI, that was I'm going to be funny showing you what being a bad mental framework trader is like, right? That was the joke. This is the developing value area. So this is the +2 standard deviation. This is the +1.5. This is the +1, which is our developing value area high. 0 essentially is where VWAP is, right? The -1 is our developing value area low. And then we have the -1.5 and the -2. Yes, there is a 0.5 here and a -0.5 there. Not really important. Not important. The only thing is I have in my slides here, the inner kind of 0.5 VWAP area is mostly useless outside of understanding a lot of chop can happen when price hangs out in this area. Kind of what happened to one of our students here today in this region that I was talking to in the chat. It's a really cool tool, but like everything else, it's not magic. Couldn't be further from it. From the NADRO course, generally it's used to define what we call a market condition, the current market condition, intraday that is. Are we balanced or are we imbalanced? Theoretically speaking, balanced is when we're spending all our time and our rotations inside of developing value high, which is the +1, and developing value low. Doesn't mean that there can't be probes, right, beyond those areas, and there definitely are. But in general, what we're trying to figure out with that framework is, are we rotational? Another way of describing it is balanced. But rotational is the preferred term we use. And then are we imbalanced? What's that? That's where the general rotations or whatever are generally holding outside. Doesn't mean that they don't make little probes in, but those rotations are holding outside. So really, in my mind, if we look at this chart, we have a rotational period. We have an imbalanced down period that then fails here and goes back to rotational. And that's where we are right now. Is it going to be super important for us in the scalping course to define these? No, it's not. But I did want to introduce the concept to you of defining, hey, this market's rotational versus this market is imbalanced, or what people might call trending, right? Our use in the scalping course is going to be much more fluid, much more loose. We are going to use the DVA framework as a useful guide. I thought about writing signpost here. It's going to be relevant to know where we are on the DVA framework. And so let's talk a little bit about what's normal in terms of movement with this. So really, more of the same until proven otherwise is one concept. If you're rotational, kind of the expectation is that we stay rotational until proven otherwise. If we are imbalanced, we essentially expect, only using the DVA framework, order flow and other tools might have us having different expectations, but the DVA framework on a standalone basis has us generally expecting more of the same in terms of what condition it's in until proven otherwise. We're not going to heavily lean on that for scalping, but I do want you to understand the concept. Another part of what's normal. So, number one is running out of real estate here. More of the same until. Number two is, let's call it normal expectations. It's a horrible wording there. Doesn't matter. The expectation, I'm not going to call it normal. I'm going to call it a rotational expectation. Rotational expectation, and this goes back to a bunch of concepts in the NADRO world, is kind of what do you know? Today's a perfect example of this on multiple fronts. And a lot of you guys have probably heard this before. If, the people who like use market profile or volume profile or even DVA like this, there's this kind of value traversal concept, right? Which is what I actually have here, and didn't even read it in my own slides, and I was just going to say it that way. If you kind of get into one side, the expectation is that you get to the other side, right? And what happened in this market? We kind of came from above. We started to get inside around this area, and we ended up traversing, right? Kind of did it there. Then we go imbalanced, and then that fails. And what do? We hold the lower edge, and we went up to the upper edge. So there is that expectation. In NADRO terms, we kind of have a law of market dynamic that kind of puts a framework in our minds that is kind of the expectation for what's normal. So if we combine those two things, more of the same until proven otherwise, and value traversals, we can actually find areas like this coupled with a real weakening order flow, sellers maintaining control, those kind of things. And we can start to see the potential for changes or non-normal type things or shifts kind of, I hate to say before they occur, but as they occur. There's clues, right? So let me say it a little bit differently. When we're at this lower edge of DVA, the DVA would have us expect more of the same until proven otherwise, right? So the expectation is that we continue rotational and eventually make our way back up to testing the upper extreme.